Hello there, everybody. Thank you for coming. Go ahead and get this thing started here. We've got a short period of time here, a lot to talk about. Thank you all for joining this webinar announcement of our latest report in the IRIS Risk Retina series. For those of you that I have not had the pleasure of meeting before, my name is David Saversky. I'm a data scientist and partner here at the Cyentia Institute. But of course, it's not just me behind these reports there. There's a cast of, well, maybe not thousands, but certainly mighty in effort, if not in number. I'm joined today by John Sturgis, who is manning the Q&A, as well as Carolyn, who's helping us do all the web wizardry on the back end. So thanks to you both for doing that. Should mention that we are having lots of time for Q&A today there. So if there's anything that comes up there, please use the Q&A or chat functionality of Zoom to ask any questions there. John will try to field those while I'm chatting. And of course, afterwards, then I will try to address any questions that are outstanding. If you think of any questions that after the webinar come to mind there, please write to us. We're happy to chat there. You can write to us at retina@cyentia.com. Cool. So let's get started. What are we talking about today? You may know our IRIS series there. This is the latest in our Risk Retina companion series to IRIS. You can think of this as kind of a methodological companion to the IRIS 2022, which is focused specifically on the finance sector. I did mention the IRIS 2022 report, which came out just, 2 months ago, if not even that at this point there. Time is all very fungible these days. The IRIS series is now a long-running series. It's one of our longer-running report series. There are some other ones in the Cyentia library that are longer-running, but we're getting there with IRIS. We started out back in 2020 with the Information Risk Insight Study, followed that up with the Extreme Analysis Report, where we looked at the most extreme events by record counts and by dollar size impacted. Then we looked at multi-party breaches and the IRIS tsunami. And then we've recently partnered with CISA on this most recent report that came out just recently on the IRIS 2022 report. The IRIS is really a key part in our hearts there, analytically, emotionally, effort-wise, et cetera there, because it helps us really focus upon what happens when all of the controls that we have from a security perspective fail, whether that be the frequency of those losses or the magnitude of losses. And our IRIS series is a public series of reports that gives you the information that you need to know to help manage that at a broad scale. But one thing we've heard time and time again, every time we come up with an IRIS report, is this question about what does this mean for me? What about me specifically? What about my firm as a insurance firm? What about my role as a risk manager for a large banking institution, et cetera, there? And those are questions we always would love to answer, but it's hard for us to do that in any one report. We've done 4 of these publicly so far, and we continue to work on this question there. IRIS Risk Retina is our answer to that. To that mind, we are talking about a commercial report. This is different from our typical reports. So I'm here today to talk about maybe not all the detailed reports and that the detailed results of that, but to give you a sense of why this report is important, how you might be able to use it, and why you should learn more about these Risk Retina reports in general. So this is a commercial offering. So if you were looking to get all the details in that, I'm sorry, we're not doing that here today there, but we do still think this will be valuable for you, even if you're just interested in saying what's the difference about finance versus everything else. So again, as I mentioned, as compared to some of our IRIS webinars there, we're not directly sharing all the results of this there, but we are saying the stage about why this report is necessary as compared to just the traditional IRIS reports there, and what benefits you can gain out of it beyond the public reports, focusing on why this report is important. But even if you're not in one of the finance sectors that we'll talk about here today, this is still applicable to you there. It is still important to know how we're doing these types of analyses. We are not just doing the finance sector. We already have reports out for the information services sector, and we're working on many other sectors as well. So if you are not particularly in the finance sector, but have interest in other ones there, certainly much more to hear to talk about. So who are we talking about in this report? Well, we're talking about the finance sector. How do you define the finance sector? Well, there's many different ways you can break up different organizations by type and so forth there. We use the NAICS system, the North American Industry Classification System, which breaks things up into major sectors. We're using the NAICS 52 sector there, which includes a couple of subsectors as well. It includes things such as central banks. So, think the Fed and the other equivalents there. It includes credit intermediation and related activities. You can think credit card issuers are in this space often. Securities, commodities, contracts, and others, which is kind of a catch-all for securities brokers, traders, and so forth there. Insurance carriers is a special one there. Anyone that's doing insurance brokerage, insurance activities there. And then 525, which is kind of a catch-all again for funds and trusts and other sort of financial instruments and vehicles there. This chart is from the IRIS 2022 showing the proportion of all events based upon these major industries. Right up at the top there, you've got healthcare, followed closely by financial sector. So of the events that are in our data set, and we've partnered with Advisen, we'll talk a little bit more about our data set. The financial sector is extremely prevalent. It is the number 2 just in terms of raw number of these events. There's a lot of industries out there, a lot of good coverage there, and we think there's a lot to be learned specifically from this. If you're looking at some of these subsectors, say insurance, or you're a large financial institution there and say, well, that's great, but I may not be lumped in exactly with all these other peers there. We have heard that from several people, and we do have subsector appendices that are available for a modest upcharge there. We think that the financial sector at the level of 52 comprises a lot of what we're looking at there, and it's broadly applicable, but we realize that there are some things that want to get a little bit more specific. And so we do offer a subsector appendices for both the major banks as well as the insurance ones. And if you are in one of those other subsectors, please write to us and let us know. We'd be happy to work on that as well. So who is a retina report for, and why might you be interested in any of this? Well, I think retina has so many applicabilities. I've noticed a number of names already here on the attendance list from the Society of Information Risk Analysts there. Hello, thank you all for joining. It's great to see you again. But cyber risk quantification is a great place to be. Whether you are using a fair methodology or another there, in Risk Retina, we provide a lot of ways for you to quantify risk from a loss magnitude and loss frequency perspective. We provide parameters that can be used in the fair analysis, whether you are using a commercial tool or whether you're using your own tool. We're not specifically tied to fair analysis there, but we realize that that has a special place in many people's hearts. So we make sure that any sort of analysis we do can be applied to that. When you buy a Risk Retina report, you get a actual set of parameters that you can use for your sector, for your size, and say, this is how the publicly discoverable events have been described in terms of loss magnitude and loss frequency. For an example of this, you can look at our IRIS 2022 report, where we actually provided parameters for the overall distribution set there. And in the financial services sector, we go much deeper to say, here's how this differs for the financial services sector. Spoiler on this, it is very different for the financial services sector compared to the overall economy, as it may or may not surprise you, both in terms of the distributions that are being used, as well as the parameters of those distributions. But, cyber risk quantification is fantastic, but there's much more to it than just CRQ. It's more than just the risk quantification aspects. There's also insurance buyers. Mentioned the insurance carriers on this as well. But that in terms of figuring out what are the causes of these types of events? What are the major classifications of these types of events? How do they differ in terms of magnitude based upon where they're being occurred in? Information security strategists. We're doing a lot of work recently in terms of attack and various type of activities there to be able to say, what are the common initial access techniques that are present in these events there? We're going to be doing much more work on that over the coming months there right now. We started to do that in the nonprofit and financial services and information services sector there with work on VERIS. You'll be seeing much more of that coming out in the future. SOC analysts, this actually is not just in the realm of security strategists. This actually is for the actual technical people that are actually down in the weeds there to actually know what are the common attack techniques that are out there, both from a malware variety, intrusion techniques, et cetera, where we can determine those. Vulnerability managers, of course, that's out there as well. GRC professionals, as a former GRC professional or recovering GRC professional myself there, I think this information is fantastic. It really excites me. And of course, I think just about anyone else that has mentioned on that, I think it has a great amount of applicability. So let's talk a little bit about what's in this study. At a high level, what kinds of things are in this and why is this study important? We have 4 in the IRIS series so far. They're publicly available. We have the nonprofit out there. Why do we feel the need to do one specifically for the financial services sector? Well, if you look at things such as the annual probability, so this is the chance that a given firm will have at least one of these events in a given 12-month period. We can see there's at least a 14, almost 15% chance that any firm in this will have at least one event and perhaps even more events. So that is substantial. That is non-trivial. Not all of these will be large in terms of impact there. Many of these may be handleable by some firms, but some of them can be quite large. If you talk about the typical loss magnitude on that, we have $466,000 for a typical event in our data set, specifically to the financial services sector. And this is substantially higher than what we saw for the overall set for IRIS 2022, where you saw a typical average about $266,000. You're almost doubling that now, going up to nearly $500,000 for a typical size. So the financial services sector, because they're handling sensitive information, they're handling sensitive data, that is a great place for criminals and losses to occur, unfortunately. So we think that this is really an important area to provide additional insight into. Extreme losses, not just in terms of the typical losses, but we know that there are the opportunities for these large catastrophic type events. And in the financial services sector, we see, a 1% chance of a loss of 54 million or greater. So that's substantially different from a loss of about $500,000. Now you're talking about, okay, a typical loss, 466,000, certainly not trivial, but when you're talking about, the major banking institutions, that's not huge amounts of money. But now you're talking about a chance of what happens when the meteor strikes, very large events of 54 million. Since we're speaking to a financial services crowd here, you may be familiar with a tail value at risk calculation. This is essentially a way of saying that once you get into those rarefied spaces where you have those very large events, how much do we expect those things to cost? So you're not just looking at 54 million, which is the minimum amount of one of those tail events, but what is the total value of everything that is in that extreme range averaged out? And you get some really gobsmacking numbers here. We're looking at $3 billion of losses specifically for the financial services sector that are possible once you get into that extreme territory. So this is saying that it's important to manage to what is typical, what is commonplace, as well as what is extreme. You need to prepare for both the ordinary as well as the extreme to properly manage your overall risk portfolio. And then we do our best to try to provide some context as to what's behind these types of events there. As I mentioned earlier, we're doing quite a bit of work on attack and similar type of methodologies right now, where behind nearly 6 out of every 10 events, it's a typical system intrusion type event there. So it is really the common type place of things there that are really most common for these financial services sectors. So let's get a little bit more into loss magnitude and frequency and what this entails. This is a chart from our IRIS 2022 series where you can see, again, those measures of typical as measured by median and geometric mean are around that $266,000 mark, with that 95th percentile way out there at 52 million. For the finance sector, again, it's 466,000 or 1.75 times that of the typical that we saw in IRIS 2022. Very large amounts. But this differs not just for the particular finance sector, but by the size of the organization that you're in. So there's quite a bit of difference between the very large institutions, such as central banks, some of the larger insurance brokers, and those smaller firms that are out there, such as small credit unions or single insurance agents and so forth there. So if you look at the very large financial services, those of 100 billion, and if you compare them with their smaller brethren, those are in the 10 million to 100 million, certainly not trivial, but certainly much, much smaller there. those large firms are 2.35 times more likely to have an event than their smaller firms. So those large firms are big targets. They have the ability to experience large losses. And frankly, they need the information available in some of our reports and others there to help manage that, to properly manage that risk portfolio. One of the things that I think makes Risk Retina different from other reports, and there aren't too many other reports out there like this, is that we're pretty transparent about our methodology. We take particular pride at Cyentia and myself personally in saying this is the information that we have that is the best available to us, but we're always very transparent about both our methodology as well as the limitations of that data. So what we've done this in our IRIS series, but we go into this in much more detail in our Risk Retina series, is show how good are these estimates, how good are these probabilities. And what you're looking at here is a chart that comes straight out of the finance sector there, where we're looking at the number of events. This is in the gray bar that we actually measured in our data set, the probability of having at least one event, two events, or maybe even no events whatsoever. And then what does our model say? And the important thing to note here is that the gray bar and the blue bars are virtually identical. That means we have an extremely good fit for our data set. We operate on a 10-year window of data with thousands of events out there, and that our models are matching this very, very well. It doesn't mean that the future won't change, but it does mean that historically we can estimate the frequency of these events very, very well, so that these numbers can be relied upon and can be used to bootstrap your analysis. It's important to mention here that I think that one of the benefits of Retina is that it helps answer the question of how do we compare to our peers? You as the risk analysis team or SOC analysis or the CISOs of various financial institutions, you know a great deal about, I hope, your institution. You know where you are better than your peers. You may know where you are more challenged than your peers, but you may not know exactly what's happening in the broader industry. You have to be focused upon the day-to-day operations of your organization. With Risk Retina, you can actually bootstrap analysis and say, this is what's happening in my sector, and then focus upon what's unique about your situation. I can't tell you what the exact probability of your particular firm is of having one of these events, but I can say, here's what's happening on firms like yours. And then you can come in and say, okay, I think we are better than the average bear when it comes to ransomware treatment, or we have some challenges in that space from endpoint detection. And that allows you to start from a known, good, reputable source of analysis, bootstrap your analysis, and get to value much more quickly. The idea here is that you need to be spending much less time on doing the analysis and much more time actually managing risk. And I think Risk Retina is a great way of doing that. We can also talk a little bit about our incident patterns. So this is a chart from IRIS 2022, where we have broken all of the events of the thousands of events in our data set into major patterns, such as system intrusions, ransomware, insider misuse, et cetera there. And we've plotted them along both frequency and size of impact. The dotted line, for those of you who haven't seen this chart before, represents where we would expect the financial impact of these types of events to be roughly equivalent to how often they occur. So that means if something is very close to the line, then it is about as costly as we expect it to occur. We can see here that system intrusion is by far and away the greatest pattern that we see here. And this gets even more pronounced when you look at the financial services sector. When you come and look at both frequency and impact, it becomes even more dominant around that. And with the financial services, you get to see even more of that. So that was kind of a whirlwind tour of what's kind of in the report there. Some of you may be asking, especially some of the more quantitatively around, you may say, well, can I do this myself type of thing? And the answer is yes, you certainly could do some of this work yourself there. We are leveraging the Advisen data set. If you've tuned into any of our previous reports or webinars, you've heard us talk about the Advisen data set before, which is tens of thousands of events spanning decades of information. We particularly use a 10-year slice of that to get something that is most relevant from our current technologies, as well as being relatively stable. But there's a lot of work that goes into managing that data set there. Advisen updates on a monthly basis. We update our data set on a monthly basis there. There's a lot of work to transform that raw information into actual analytical product. We spend quite a bit of time doing that there. And we have actually customers that are customers of both, that actually use the Advisen data set for some particular analysis there, but then use ours to bootstrap their analysis to get to value quicker. So one of the things that we do with that data set is we standardize it. Such work such as the patterns, the attack patterns that we are also working on there, the industry classification there, that's all of our standardization there to transform this raw information into something that's useful from the analytical product. And that powers all of our analysis that we then contextualize that with both our data science expertise as well as our security expertise. I think Cyentia is fairly unique in that we are not just data scientists, but we also have many, many years of security expertise as well. We're all practitioners there. You can think of it when you buy a Risk Retina report that you get access to a on-demand consulting expertise from data scientists that can help you get to value quicker without actually going to have to stand up a data science team, go out and contract with somebody there at consulting rates, et cetera there. All that being said, what you get when you purchase Risk Retina, we're transparent about it. If it's a flat price of $15,000, is an all-inclusive report. Which is a report from the financial services that includes everything that you've seen here today and much more. It includes the parameters exactly that need to be fit on. It includes the pattern information. It includes handy tables that can be used that are specifically applicable to the financial services sector there. That's all licensed for your internal use there. It's the latest and greatest information. We've got a November 2022 date on that one there. We've just published it on our internal library right now. So it's a Thanksgiving treat at that. If that has not convinced you and you still would like to see a little bit more about what's around that there, you can look at our Risk Retina for nonprofits. We realize the nonprofit sector is challenged and it is the season out there. So we have made the nonprofit version of Risk Retina available for free download. You can get that with no registration required up at cyentia.com/retina. That'll give you a free copy of that report, and everything that you see in Retina, you will get in the financial services, plus much more, because we have continued to refine our analysis since then, work on the latest and greatest information. So that was a whirlwind tour. If you'd like to know more about Risk Retina, we'd love to chat with you there. You can find out more information at cyentia.com/retina. You can email us at retina@cyentia.com. Also at our webpage, you can actually book a free meeting there to talk a little bit more about your specific situations and learn more about whether or not Risk Retina is right for you. And with that, I'd love to get some questions. Operators are standing by. I see no questions at this point there. Fantastic. Well, I think we're just about at time. I'd like to thank you all for attending here. It's been great to have you there. If there's questions that I have, again, as I mentioned, if there's questions that pop up to mind and we missed it there or we didn't quite hit your itch there, please let us know. We are working on several more of these Risk Retina reports right now. We'd love to get your feedback there about how we can make this valuable to you in whatever role you're in, because I think this is just a unique opportunity for so many firms there. Well, thank you all. Have a great day and happy holidays and happy Thanksgiving to you all.